Event report: Microsoft withdraws from OpenAI Stargate project due to demand overestimation. Date: February 25, 2025. Location: Redmond, Washington, USA. Overview. In a significant strategic shift, Microsoft has announced its decision to withdraw from OpenAI's ambitious Stargate project, a venture valued at an astounding $500 billion. This decision has raised concerns about the future of artificial intelligence AI investments, particularly in light of what Microsoft perceives as an overestimation of demand for AI infrastructure. The move has coincided with reports of Microsoft canceling multiple data center leases across the United States, indicating a potential oversupply in AI infrastructure and prompting a re-evaluation of the company's investment strategies. Key developments. 1. Withdrawal from Stargate project. Microsoft's exit from the Stargate project, which has been closely associated with OpenAI since their partnership began in 2019, has sent ripples through the tech industry. Analysts suggest that this withdrawal is linked to OpenAI's exploration of new partnerships, particularly with Japan's SoftBank, which could signal a shift in the dynamics of AI development funding. 2. Data center strategy shift. Reports indicate that Microsoft has begun to cancel significant data center leases across the U.S., with implications that the company is facing an oversupply issue in its AI infrastructure planning. The company has reportedly let go of over a gigawatt of agreements, shelving multiple planned projects, which suggests a cooling demand for AI capabilities. 3. Misjudged demand. Analysts speculate that Microsoft's decision stems from a miscalculation of the immediate demand for AI services. Initially, Microsoft planned to invest $80 billion in AI infrastructure during the current fiscal year. However, market dynamics have prompted a reassessment of this figure. The company's internal evaluations may have revealed that the anticipated growth in AI usage is not materializing as expected. 4. Emerging competition. The recent emergence of competitive AI models, particularly from Chinese developers like DeepSeek, which claims to offer comparable performance to leading US models at lower costs, has further complicated the demand landscape. This competitive pressure is forcing Microsoft and other tech giants to reconsider their massive investments in AI data centers. 5. Microsoft's official position. Despite the cancellations and the scaling back of its data center plans, Microsoft has reassured stakeholders of its ongoing commitment to infrastructure growth. A company spokesperson stated, "While we may strategically pace or adjust our infrastructure in some areas, we will continue to grow strongly in all regions. Our plans to spend over $80 billion on infrastructure this fiscal year remain on track as we continue to grow at a record pace to meet customer demand." Timeline of events. 2019, Microsoft forms a significant partnership with OpenAI, becoming a key financial backer for the organization. February 2025, reports emerge indicating Microsoft's cancellation of multiple data center projects and leases, coinciding with its decision to withdraw from the Stargate project. Analysis. The decision to withdraw from the Stargate project and to scale back on data center investments reflects a cautious and strategic approach by Microsoft in response to a rapidly evolving AI landscape. The tech giant's re-evaluation of its investment strategies illustrates the complexities and unpredictability of forecasting demand in the technology sector. The oversupply of AI infrastructure, coupled with the introduction of competitive AI models, has forced Microsoft to reconsider its business model and investment priorities. As the company navigates these challenges, its ability to adapt to changing market conditions will be crucial for its future success. Conclusion. Microsoft's withdrawal from OpenAI's Stargate project is indicative of a broader trend within the tech industry, where companies are grappling with the realities of AI demand and infrastructure investment. As Microsoft recalibrates its focus on AI infrastructure, the implications of this decision will likely resonate across the industry, influencing investment strategies and partnerships in the evolving landscape of artificial intelligence. Sources: News 9 Live. TD Cowen reports. Analyst insights. Microsoft official statements. Microsoft's decision to withdraw from OpenAI's Stargate project has sparked a significant conversation about the state of artificial intelligence AI demand and infrastructure investments. The company, a prominent financial supporter of OpenAI since 2019, is now reassessing its strategy in light of perceived overestimations of AI infrastructure needs. Counterintuitive information. 1. Perceived demand versus actual demand. One of the most counterintuitive aspects of this situation is that despite the growing interest and investment in AI, Microsoft has determined that the demand for AI infrastructure may not align with initial projections. Traditional wisdom in the tech sector often suggests that increasing investments in AI will always lead to rising demand. However, Microsoft's actions indicate a more cautious approach, suggesting that the anticipated growth may not be as robust as previously thought. 2. Massive financial commitments versus cancellations. Microsoft had initially planned to invest $80 billion in AI infrastructure for the fiscal year. Yet they are now canceling significant data center leases and shelving projects. This stark contrast highlights a disconnect between ambitious planning and the reality of market conditions. It's counterintuitive to think that a company would scale back so dramatically when they have laid out such extensive financial commitments. 3. Emerging competition and its impact. The emergence of competitive AI models such as China's DeepSeek, which claims to offer similar performance at a lower cost, adds another layer of complexity. The expectation was that AI performance would continuously improve and justify a need for more infrastructure. However, this new competition suggests that companies may not need to invest as heavily in physical infrastructure to remain competitive, challenging the prevailing notion that more investment equates to better outcomes. For Microsoft's continued commitment amidst cuts. Despite the scale back, Microsoft has stated that they intend to continue pursuing growth in AI infrastructure, albeit at a different pace. This raises questions about the strategic rationale behind their initial projections versus their current reassessment. It highlights a counterintuitive dynamic where a company can still express commitment to growth while simultaneously retracting significant investments. 5. Reevaluation of partnerships. Microsoft's withdrawal from Stargate may also signify a reevaluation of partnerships within the AI landscape. While it is common for tech giants to seek collaborations for growth, Microsoft's decision to step back suggests a shift in strategy that could influence how partnerships are formed in the future. This could lead to the unexpected outcome of companies becoming more selective about investments and partnerships, contrary to the trend of broad collaboration seen in the tech industry. 6. The concept of oversupply. The notion that there could be an oversupply of AI infrastructure is particularly striking. In an era where AI is often viewed as a panacea for various business challenges, the idea that there could be too much infrastructure suggests a complex market dynamic. This counters the typical narrative that technological advancements will always drive demand upward. Instead, it suggests that there are limits to how much infrastructure is truly needed. 7. Microsoft's public messaging. The company's official stance indicates confidence in its growth trajectory despite the pullbacks. This juxtaposition of public optimism against internal strategic shifts raises questions about transparency in corporate communications. It's counterintuitive for a company to project confidence in growth while simultaneously retracting from major projects, which could signal to investors and stakeholders a more cautious outlook than what they are publicly portraying. Conclusion. Microsoft's withdrawal from the OpenAI Stargate project and its corresponding re-evaluation of infrastructure investments reveal a complex landscape where demand predictions are being recalibrated. The counterintuitive elements of this situation highlight the unpredictability of the AI market, the challenges posed by emerging competition, and the necessity for corporations to remain agile in their investment strategies. As Microsoft navigates these changes, the implications for its future and the broader AI industry will be closely watched. serving as a reminder that even the most established players must adapt to evolving market realities. The decision by Microsoft to withdraw from OpenAI's Stargate project and scale back its AI data center investments is a significant development that raises multiple points worthy of examination. While many media outlets have focused on the immediate implications of this decision, several critical aspects may be overlooked that could have long-term ramifications for the tech industry and the future of AI. Overestimation of demand for AI infrastructure. One of the most significant yet often understated elements of Microsoft's withdrawal is the perceived overestimation of demand for AI infrastructure. Microsoft initially planned to invest $80 billion in AI data centers for the fiscal year. But this figure now seems overly optimistic given current market conditions. The revelation that Microsoft has canceled numerous data center leases and shelved projects indicates a strategic pivot that may reflect broader uncertainties in the AI market. Why this matters? 1. Market dynamics. The tech industry often operates on projections that can dramatically shift based on emerging technologies and competitive pressures. Microsoft's decision highlights the inherent risks in forecasting demand for rapidly evolving technologies like AI. The overestimation suggests that market dynamics are more volatile than previously anticipated, potentially leading to increased caution among investors in companies looking to enter the AI space. 2. Investment strategy reevaluation. Microsoft's recalibration of its investment strategy could influence its competitors and other players in the AI ecosystem. If a tech giant like Microsoft perceives a cooling demand for AI infrastructure, it may prompt others to reconsider their own plans, leading to a more cautious investment landscape that could stifle innovation in the short term. Competition from emerging technologies. The report mentions new AI models such as DeepSeek from China that claim to match the performance of leading US models at a lower cost. This emerging competition adds complexity to the demand outlook for AI services and infrastructure. Why this matters? 1. Global competition. The rise of competitive models from countries like China underscores the need for US companies to maintain a competitive edge. If AI models can be developed more efficiently and cost-effectively abroad, US companies may face pressure to adapt their strategies, potentially leading to a shift in global tech leadership. 2. Innovation pressure. The introduction of cost-effective AI solutions could catalyze innovation in existing AI models. Companies may need to pivot their focus toward developing more efficient, scalable, and cost-effective AI solutions, which could shift the industry landscape significantly. Strategic partnerships and alliances. Microsoft's withdrawal coincides with OpenAI's search for new partnerships, notably its dealings with SoftBank. The implications of shifting alliances within the tech industry can have cascading effects on investment strategies and market dynamics. Why this matters? 1. Changing alliances. As tech companies explore new partnerships, the landscape of innovation and investment can change rapidly. The partnerships that OpenAI is pursuing may lead to a shift in the competitive balance within the AI sector, potentially sidelining Microsoft in the evolving AI ecosystem. 2. Collaborative innovation. The dynamics of collaboration and competition in the tech industry can lead to either accelerated innovation or stagnation. If OpenAI's new alliances yield successful AI products, it could set a precedent for future collaborations that might bypass traditional industry leaders like Microsoft. Microsoft's commitment to growth. Despite the cancellations and strategic shifts, Microsoft has stated that it remains committed to growth and infrastructure investments. This juxtaposition raises questions about the sustainability of their growth strategy amid changing market conditions. Why this matters? 1. Sustained investment versus realities of demand. Microsoft's assertion of ongoing commitment to its infrastructure spending despite scaling back could indicate a potential disconnect between their strategic vision and the realities of market demand. If demand does not meet expectations, this could lead to further adjustments and possible financial repercussions. 2. Long-term viability. The ability of Microsoft to recalibrate while maintaining a growth trajectory will be critical for its future success. The company must navigate the fine line between aggressive investment and prudent financial management in a rapidly changing industry. The broader implications for AI investments. The fallout from Microsoft's decision may not be limited to its own operations but could have broader implications for the AI sector and tech investments more generally. Why this matters. 1. Investor sentiment. The perception of an oversupply of AI infrastructure may influence investor confidence across the tech sector. If major players like Microsoft signal caution, it could lead to tighter investment conditions for startups and smaller firms seeking funding. 2. Potential for market correction. As companies reassess their AI infrastructure needs, there may be a market correction that aligns investments with actual demand. This could lead to more sustainable growth paths for AI technologies and lessen the risks associated with overinvestment in speculative technologies. Conclusion. In summary, while Microsoft's withdrawal from OpenAI's Stargate project and its scaling back on data center expansions may seem like a straightforward business decision, the implications are far-reaching. The overestimation of AI demand, the rise of global competition, strategic partnerships, and the potential ramifications for investor sentiment all form a complex web of considerations that could shape the future of the tech industry. The decision serves as a critical reminder of the volatile nature of tech investments and the importance of aligning growth strategies with market realities. As the AI landscape evolves, understanding these underlying factors will be essential for stakeholders navigating this dynamic environment. 1. Microsoft's withdrawal from Stargate and its implications. Microsoft's decision to withdraw from OpenAI's Stargate project signifies a critical re-evaluation of its AI investment strategies. This move raises questions about the viability and future of AI projects that require substantial infrastructure investments. Analysts suggest that this withdrawal could impact OpenAI's ability to secure funding and partnerships, especially as they seek new alliances, such as their recent discussions with SoftBank. This shift highlights the uncertainties in the AI market and indicates that even major players like Microsoft are reconsidering their roles in ambitious projects due to perceived overestimations of demand. 2. Data center strategy and the oversupply issue. Microsoft's scaling back on data center leases and its decision to cancel multiple agreements reflect an emerging oversupply of AI infrastructure. The company's initial plans to invest $80 billion in AI data centers have been called into question, leading to a significant strategy shift. Analysts from TD Cowen have pointed out that Microsoft has let go of over a gigawatt of agreements, which signals a cooling demand for data center resources. This trend not only reveals a potential miscalculation of the market's needs but also indicates a broader re-evaluation of AI infrastructure investments across the industry. 3. Demand overestimation and market dynamics. The crux of Microsoft's strategic reassessment lies in the overestimation of immediate demand for AI services. As AI models become more efficient, the need for extensive infrastructure may diminish, leading to a reconsideration of investment levels. The entry of competitive models like DeepSeek, which offers similar capabilities at lower costs, adds complexity to the demand outlook. This emerging competition raises concerns about whether the anticipated growth in AI services will materialize as expected, prompting companies like Microsoft to recalibrate their spending and project plans. 4. Microsoft's official stance and future growth outlook. Despite the pullback from Stargate and the cancellation of data center projects, Microsoft asserts its commitment to growth in AI infrastructure. The company maintains that its plans to allocate over $80 billion for infrastructure remain unchanged, albeit with a more cautious approach. A spokesperson emphasized that while they may adjust the pace of development in certain areas, they are focused on meeting customer demand. This official stance suggests that Microsoft is balancing the need for continued growth with the realities of an evolving market landscape, indicating a more strategic and measured approach to future investments in AI technology. 1. The dot-com bubble 1997 to 2001. The dot-com bubble was a period of excessive speculation in the late 1990s characterized by the rapid rise of internet-based companies. Investors placed lofty valuations on tech startups, leading to a surge in funding. However, many of these companies overestimated demand for their services, resulting in widespread failures when the bubble burst in 2000 to 2001. This led to significant financial losses and reshaped the tech investment landscape, emphasizing the need for more sustainable business models. 2. The housing market crash 2006 to 2011. In the mid-2000s, the U.S. housing market experienced a boom fueled by subprime mortgages and speculative buying. Many investors and homebuyers overestimated the demand for housing, leading to inflated property prices. When the bubble burst in 2007, it triggered a financial crisis, leading to a massive recession. The aftermath forced a re-evaluation of lending practices, real estate investments, and market regulations, similar to how Microsoft is reassessing its AI infrastructure strategy. 3. The electric vehicle market overestimation 2010s. During the 2010s, several automakers and tech companies made significant investments in electric vehicle EV technology, anticipating a rapid adoption of EVs. However, consumer demand grew slower than expected due to high costs, limited infrastructure, and consumer skepticism. Companies like Tesla and General Motors faced challenges in scaling production and meeting market expectations, prompting a reassessment of their growth strategies. This mirrors Microsoft's situation as it recalibrates its AI infrastructure investments in light of overestimated demand. Microsoft's recent withdrawal from OpenAI's Stargate project and its subsequent scaling back of AI data center plans indicate a significant shift in the tech landscape, raising critical questions about the future of AI infrastructure and investment strategies. This decision, which stems from the perceived overestimation of demand for AI services, could reshape not only Microsoft's trajectory but also influence the broader AI ecosystem over the coming years. Future outlook and predictions. 1. Cautious investment strategies. Microsoft's retreat from the Stargate project is likely to prompt a wave of cautiousness among tech giants regarding AI investments. Companies that have heavily invested in AI infrastructure may re-evaluate their plans and adopt a more conservative approach, focusing on optimizing existing resources rather than expanding. This trend could lead to a consolidation phase in the AI sector where only the most viable projects receive funding. 2. Increased competition and innovation. The emergence of competitors like China's DeepSeek, which challenges the performance of leading US AI models at lower costs, will likely drive innovation. Companies will need to invest in more efficient and cost-effective AI solutions to maintain market share. This competitive pressure could spur breakthroughs in AI technology, as firms strive to differentiate themselves in a crowded marketplace. 3. Shift towards hybrid AI models. As companies reassess their AI strategies, there may be a shift towards hybrid models that combine cloud-based solutions with on-premises infrastructure. This approach allows organizations to better manage costs while ensuring they have the capacity to scale as demand grows. Microsoft may lead this trend, leveraging its existing cloud capabilities to offer flexible AI solutions tailored to diverse customer needs. 4. Focus on AI ethics and governance. With increasing scrutiny on AI technologies and their implications, companies will likely place greater emphasis on ethical considerations and governance frameworks. Microsoft's decision may reflect a broader industry trend towards responsible AI development, where investments are more closely aligned with ethical standards and societal needs. This focus could lead to the establishment of industry-wide best practices and regulatory frameworks governing AI deployments. 5. Re-evaluation of data center needs. The current oversupply in AI infrastructure suggests a need for companies to reassess their data center requirements. Future investments might favor modular, scalable solutions that can be adjusted based on real-time demand. Companies may also explore partnerships and collaborations to share resources and reduce overhead costs associated with maintaining large underutilized data centers. 6. Potential for market disruption. The withdrawal from Stargate may open the door for new entrants or smaller players to capture market share previously dominated by major tech firms. Startups focusing on niche AI applications or innovative business models could disrupt the status quo, encouraging a more diverse ecosystem. This disruption could lead to new value propositions for customers, fostering a more competitive environment. 7. Global implications for AI development. Microsoft's decision to refocus its investments domestically could have global implications for the AI landscape. Other tech firms may follow suit, leading to a reallocation of resources towards local markets. This trend could affect international collaborations and innovations as companies prioritize investments that promise quicker returns in familiar environments. 8. Long-term growth in AI demand. Despite the current cooling in demand for AI infrastructure, long-term projections still indicate substantial growth in AI applications across various sectors. As businesses increasingly recognize the value of AI in driving efficiency and innovation, demand is expected to rebound. Companies that strategically navigate the current landscape will be well positioned to capitalize on this resurgence. Conclusion: Microsoft's withdrawal from the OpenAI Stargate project and its scaling back of AI infrastructure investments highlight the complexities of forecasting demand in the tech industry. While the immediate outlook may seem cautious, the long-term prospects for AI remain promising. The industry is likely to undergo significant evolution characterized by increased competition, innovative business models, and a stronger focus on ethical AI practices. Companies that adapt to these changes and prioritize sustainable growth will navigate the future landscape of AI successfully.